Imagine if oil hits $200 a barrel and gasoline in America jumping to $7 per gallon. Everything gets more expensive, inflation explodes, and the world tips into deep recession, which becomes very possible if the Strait of Hormuz stays closed for months. This is exactly what happens. Gasoline prices and direct impact on Americans. Current average U.S. gasoline price, May 2026, is around $4 to $4.5 per gallon. At $200 oil, it would surge to $6.50 to $7.50 plus per gallon nationally. In high-tax states like California, it could hit $8 to $10. A typical family would pay $100 to $200 more per month on fuel alone. Many would have to choose between gas, groceries, or bills. Ride shares, Amazon deliveries, trucking, and public transport would all become much more expensive. Inflation explosion. Oil feeds into almost everything: food, plastics, shipping, heating, manufacturing. This shock could add 1.5 to 3% extra to overall inflation on top of existing levels. In a bad scenario, headline inflation could reach 5 to 7% or higher. The Federal Reserve, Fed, would be forced to keep interest rates high or even raise them, making mortgages, car loans, and credit cards more expensive. People and businesses borrow and spend less. Economic growth and recession risk. American consumers drive 70% of the U.S. economy. When they cut back on non-essential spending, clothes, travel, dining, tech, companies see lower sales. Result? Layoffs, reduced investment, and slower growth. Analysts estimate GDP could drop 1.5 to 2.5% or more. Recession probability rises sharply, 30 to 60% plus, depending on how long the shock lasts. Hardest hit sectors: airlines with jet fuel, auto manufacturing, retail with Walmart and Target margins squeezed, chemicals, and trucking. How much does the Strait of Hormuz actually affect the U.S.? Good news, the U.S. only gets 5 to 8% of its crude imports directly from the Persian Gulf. Most comes from Canada, around 60%, Mexico, and domestic shale production. America is now the world's top oil producer. Bad news, oil is a global market. Even if the U.S. doesn't import much from Hormuz, the worldwide price still skyrockets, and Americans pay it. Positive, U.S. shale companies would make massive profits and could ramp up production, though it takes time and capital. Government and central bank response. Strategic Petroleum Reserve, SPR. The government can release oil to temporarily cool prices, as done before. The Fed faces a tough choice: fight inflation, higher rates, or support growth, lower rates. Risk of stagflation, high inflation plus stagnation. Possible short-term help: temporary gas tax cuts or subsidies, but federal budget is limited. Winners and losers in America. Oil companies, Exxon, Chevron, and shale producers, record profits. Oil-producing states like Texas, North Dakota, and Alaska, more jobs and state revenue. Losers, average families, especially middle and lower class. Energy-intensive industries like aviation, farming, and logistics. The stock market, especially tech and consumer stocks, could see a big correction.